many sights to see. And when I look in my window.
Hello traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Monday, the 19th of April, and this is the Daily Report. Very interesting day that we are having this Monday. For those of you who recall, we have had this quite brutal sell-off that initiated up around the 1160 area. We had a couple of consolidation days, and then the big sell-off where it came down $30. That was on Friday. And then when we opened on Sunday, we did open a little bit lower, and the market managed to take it below a critical support level. That support level was 1133. It is based upon trend analysis as well as Fibonacci. However, the candle that we're looking at, the reason I'm kind of classifying it in between, to be a unique hammer, you've got to have a tail that is at least twice the size of the real body. We absolutely have that. We probably have a tail that is 4 to 5 times the size of the body, but you typically have the body be a little bit bigger. This body is almost doji-like. Now, I'm seeing an interesting scenario. If we come back to, this was back in February, I believe February 8th or 9th, you also had a large sell-off, and you had this consolidating candle right in here, and then at that point, the market kind of took off running. Now, are we looking at a very similar scenario? Quite frankly, I think we might be, and let me explain why. First of all, when we look at a hammer or a doji, what is happening is the market opens. As you can see, there is our open. It begins to trade lowers, and the sellers begin to really take hold, and they push that market down, and they push that market down drastically. I think at some points we were down almost about $22. However, what happens is once it does reach that bottom, buyers come into the market and they begin to push the market back up. And in this case, they push the market back up at or near the actual open of the session itself, so that what you're witnessing is, although there were selling activity, the sellers could not dominate the market, and in fact what happened is they lost their ability to control the market as that market came back up. The next thing I want to do, obviously, is take a look at how that has affected or where the market is trading currently as we look at our Fibonacci retracement. Of course, as always on this big move, I'm looking at our Fib retracement based on this doji hammer-like candle back in September, our record all-time top at 1221, and then, of course, we go ahead and we draw our Fibonacci retracement levels. And traders, what I want you to take particular close attention to is this fib level right in here, and that is our 38% retracement. So when we're actually looking at where the market is currently trading at 1134.95, our critical area that we've talked about for the last week in terms of support or resistance, depending on where the market wants to trade, if it's going to be able to hold above or below, is 1133, 1134. We're right at that point. So right now we're absolutely at a critical area. Traders, what am I recommending? I talked about being a long-term player on the long side. In other words, fundamentally, I'm absolutely bullish on this market. If we look at our long-term trend line, or the trend line that I'm going to draw based on this low here and this low here, as long as we're remaining above that, I absolutely think that we found support. Also, if I go from some tops, this is back in February 11th, I draw that over. We're well above the support there. This top also is going to match perfectly, of course, with our Fibonacci retracement area. And then lastly, these tops in here are we're trading well above that. So I am recommending that we re-enter a long position in the marketplace at this point. Where do we place our stops? absolutely the only place that makes sense is going to be to put it underneath these lows, which are around 1122. So traders, my following recommendation: enter the market from the long side, 1134, 1135. Place your stop at 1122 on a protective stop. Let's see where the market trades. If it is going to trade higher, I think we'll have a good trade. It should go to take out the last rally that we had, so I would look for, in terms of target areas in which I think the market can genuinely go to, anywhere above 1160 to 1165. That 1170, of course, is going to be our next level in terms of absolute retracement, and that takes us to a very interesting level, and we'll see if the market can genuinely take us to that point, and that's 1168.77. That's our 23% retracement level. That would be my first target, 1170, 1166, to see where the market can go. This has been Gary Wagner with WFGForex.com, your daily market update for Forex Gold. Wishing you, as always, good trading. Bye-bye.